morning. You're watching The Market right here in ET Now with me, Ayesha, Faridi, Avanne, Dubash, Nikunj Dalmia in the studios. And the markets have managed to at least shrug off all the fear that one thought that one would wake up to Monday morning. So that's not quite the case with our markets. While our markets did feel a little bit heat for sure yesterday, but this morning what you've seen is that the US equity markets definitely have recovered from what they started off the trade with, or for that matter what the US futures were indicating all through the weekend. So it's been a green close all across, about 0.5% to 0.6% move coming in for the Nasdaq, S&P as well as the Dow, and that's clearly the cue that we are waking up with as well. The GIFT Nifty is indicating a start at that 19,600 mark, and Nikunj, to think of it, yesterday we even breached the 19,500 print.
So Ayesha, look, there is no panic in the world, and there is no panic even in the bond market. There is no panic in equities, and there is no big uptick which has happened even in gold, or for that matter. There is no safe haven buying which is visible in the US bond market. So you would say that what is happening in terms of the geopolitical crisis, yes, it is important. Yes, political leaders have started posturing, and they've started talking to each other to find an early solution, and this entire geopolitical tension perhaps may just linger itself for next couple of, not days, but couple of weeks. But frankly, from a financial market standpoint, what is the message from the financial market? Something which we indicated yesterday, I think has turned out to be true, which is that this is not Russia versus Ukraine. This is very localized, and this is unlikely to have an impact in terms of the financial disruption, and I think that is happening. So whether it is the US 10-year paper, the handover from US markets last night, how Asian markets are moving today. Asia, large part of Asia was shut yesterday, so they are reacting to the news today. And frankly, if you look at the US dollar index also, and even oil, which is the most sensitive, sensitive commodity, there is no panic, there is no fear, there is minor adjustment. Traders were looking for a reason to book profits, and both locally and globally, they got one yesterday.
Yes, indeed. So just to, elaborate a little bit more on that, you did have the global markets, which initially started off lower, but then you did see some sort of a recovery kicking in. So it was for the flat line for the most part. When it came to the US markets, you've got the Asian screen as well, pretty much shaking off a lot of those pressures that we've seen coming in from the geopolitical concerns, and they're holding out in the green. And even when it comes to crude oil prices, you did see a little bit of an edge down just yesterday after the crude oil prices gained more than 4% in the previous session. But on D Street then, and our own markets, by the time we wrapped up, it was a 140-point downtick. We did snap that two-day gaining streak that we witnessed on Friday as well as on Monday, and it looks like it's been confined to a very tight range for the markets. So 19,450 to 19,650 is the kind of range that the markets have been confined to for the past 11 trading sessions. And not just that, you've also got the 10-year GSEC, which has hardened to about 7.3%. So yes, we did snap that two-day gaining streak, Nikunj. The broader markets were under pressure, but like you said, to a large extent, not really taking into cognizance the kind of geopolitical concerns.
See, a subtle correction had already started in broader market. You look at some of the railway stocks, defense stocks, power stocks, they are down double digit from the recent highs. So the markets have already started correcting, and yesterday the market correction in mid and small cap stocks only amplified. So a overbought market, or an extremely overbought market, was looking for reasons to correct, and there were plenty of factors which were at play yesterday. Now this is important for us to look at in terms of the market setting. From the Wednesday's low, which is last Wednesday, when markets have made a comeback, Nifty is up 160 points, but the Midcap index has not recovered at all. So while Nifty is up 150 points, the Bank Nifty also has come up by about 200-250 points from Wednesday's low. The Midcap index actually has actually gone back almost to the Wednesday's low. So you actually could see a situation, because it's earnings season, that markets may now be, rather than talking about mid and small cap as a category, you actually would see within mid and small cap stocks a lot of individual stocks acting and reacting to numbers. So rather than momentum, view, market cap, profile of the stock, ownership, these were the factors which were driving some of the mid-cap stocks in April, May, June, July, August. Now it could be numbers, it could be earnings, it could be projections. So what had happened, Ayesha? EMS stocks, everything went up. Defense stocks, everything went up. Railway stocks, everything went up. Not every company will come up with universal, the numbers are not going to be universal in nature because nature of business is like this. So I think now, like you say, boys will be separated from the men, wheat will be separated from the chaff. You actually will see within the mid-cap space that churn which will happen. So where companies are giving you decent amount of confidence and where valuations are supportive, those stocks will be disproportionately moving higher, and vice versa when it comes to underperformance and stocks which will lack the earning momentum.
The only thing is, and we discussed this yesterday as well, that it's been a consecutive 14-session selling spree that FIIs has seen. In fact, it's the longest in over 8 months. Apparently, the last time that we saw such incessant selling for 14 days, Nikunj, was back in December 23, 2022 to January 16, start of this year.
Okay, so what happened last time versus what is happening right now, the factors were at play. And the factor at the play which triggered the selling last time, the period you mentioned, was the yields were moving higher. Right now also yields are moving higher. Right now also the dollar index is moving higher. So this is more like a macro adjustment which is happening, and the macro adjustment I think is a function of what is happening to the dollar, what is happening to the flows, what is happening to the world and where Fed is likely to move. So I'm not surprised at all that foreign institutional investors, they sell. The history, however, has taught us that every time FIs have been big sellers and when they have been compulsive sellers, if you bought into stocks which they've owned, you actually are rewarded in the next 3 to 4 months. So I think the similar factor could be at play because large cap stocks are cheap, FIs are selling them, and if there is little bit more panic unwinding, let's say especially in banks, you actually should be a buyer there. I'm getting more and more convinced. I mean, not that I was not convinced, but I'm getting more and more convinced that you need to be overweight on banks. The numbers are good. Look at Bajaj Finance, 30% growth. Look at HDFC Bank. These are large banks. They represent the way wheels are moving in the financial sector. If some of these banks are growing at 25-30% and stocks are available at pre-COVID levels, HDFC price to book is available at pre-COVID. Kotak Mahindra Bank pre-COVID. Bajaj Finance pre-COVID. The growth is extraordinarily high and the valuations are pre-COVID. Then what should you do? Buy them.
The answer is obvious.
The spate of underperformance perhaps now is behind us for a lot of these large cap banks. Okay, that's Nikunj driving home the point that perhaps financials merit a relook and continue to remain convinced that it is a good time to buy. But what about the global commentary? What have been the comments with respect to what the US Fed could do, etc.? Let's find out. We've got Harsh here to sum it up for us. Morning, Harsh.
Good morning, Avanne. Of course, setting the context, you do have a conflict which is happening in Israel, and that move geopolitically is also having an impact on some of the global commentary that's coming through. Let's have a look at what Philip Jefferson, who's the Fed Vice Chair, is saying. He's saying that looking ahead, he's going to be cognizant of the tightening financial conditions. He's also suggesting that the higher bond yields as well will be on his mind when he is assessing the future path of policy. He's also suggesting that he wants the public to know that they're going to be mindful. Whatever is happening globally is what they're going to factor in, and they're going to do that in real time to take rates and give rates an appropriate response on the back of that. Let's also look at the commentary coming in from Ray Dalio. This is more US domestic specific. What he's suggesting is that the Fed can proceed carefully amid better risk balance. He's viewing recent developments domestically and suggesting that Kevin McCarthy's removal from the US House of Representatives is suggestive of an internal conflict within the US currently, and he also believes that it's another step away from moving from democracy to civil war. So strong words coming in from Ray Dalio on that front.
Right. Okay, let's move on and let's talk about what our market setup is looking like. Kunal as well as Naresh both here. And it was a bit of a testing time for us yesterday, Naresh, given the breach of 19,500 twice, I think, in yesterday's trading session, then the recovery getting sold into, and finally we're just about settling around that 19,500 print. What's firstly the take on the index?
So due to the geopolitical issue, we are back into the same range and getting stuck. So the new range now formed as 19,300 on the downside, 19,700, 750 on the upside. So once we cross beyond this range, that is where the trend changes, the momentum shifts. And as of now, till the time there is not much more clarity, either in terms of geopolitical scenario or the price action, we are still going to remain in this range as of now. That's the view. So once we cross 19,750, that is the point of time where you become more bullish. And in that, in this in between period time, play a little more defensive.
All right, let's get in Kunal's take as well. And Kunal, what's your reading of the markets given what transpired in trade yesterday? The fact that we snapped that two-day gaining streak, as Nikunj said, we have seen that mild correction already setting in. So did that play out?
So I think, yeah, the correction played out, but there was no sign of a trend or a conclusive trend for the indices because the Nifty is stuck into this 400-point range, largely 90,300 as a support and 9,700 as a resistance. Now, there were two important factors which happened yesterday. The Nifty closed back below the 50-day moving average. There was a slight jump in the India VIX. But again, when you look at this in the context of what was maybe 1 week back, the India VIX was almost 13 to 14 odd levels, and now we are almost at 11.4 for the India VIX. So not a significant breakout on the India VIX as such, but it says that the volatility is getting confined into a 400-point band for the index. And yesterday we closed at the pivot, that's around 19,500 for the Nifty, which is the pivot point of this 400-point band for the index. So no major signs of a trend. We'll have to wait out for a breakout on the upside. 19,700 is a breakout point. So, and even 90,300 is a support point. So traders should hold on to long positions till the time we trade above 19,300 mark.
All right, let's find out some stock-specific strategies as well then. And Kunal, since you're saying that there's no decisive trend on the downside right now, what would be your strategy in terms of individual stocks?
So I'll go with a few mid-cap names in terms of long calls. The first one is Avanne Vector Foods. That stock is making a comeback again after a recovery, after a correction of more than 15% from the recent swing highs in the month of July, August. The stock is trying to make a comeback. It's almost like a V-shaped recovery for the stock on the very near-term charts. The stock breaking past about that 1,050 mark yesterday. Would look out for targets of 1,100. Stop loss to be kept at 1,025. And the second one, which would be looking at as a buy call, would be Ipca Labs. That stock is forming actually a bullish flag formation on the daily charts. 935, 940 is the breakout point. Would look out for a target of 970. Stop loss 924.
Right. Naresh, what about your stock-specific ideas?
So first would be a buy on IndusInd Bank. Although the stock has not broken out yet, but in the last few days has been showing a lot of relative strength. Not correcting much, getting tighter and tighter into this range of 1390, 1370 on the downside, 1470 on the upside. So the range has contracted and eventually they should break out. And the first indications is by showing a lot of relative strength, even when the markets are correcting, seeing gap downs. So out there expecting an eventual breakout above 1470 and a move into a new trend. So a buy at current level, stop loss at 1390, an initial target price of 1550. Second is a buy on Power Grid or defensive stock, which has again been showing relative strength. 190, 195 is a strong support. 205 is the point of breakout. Expecting this to slowly and steadily move up and a good defensive player. Stop loss at 190, target price of 210.
All right, that's the view coming in from our chartists talking about some of their top recommendations and what they're advocating. But let's nail it down to stock-specific calls then and discuss the pharma sector in greater detail as well as Adani Ports. Anisha is here to break it down for us. Anisha, let's begin with Macquarie's view then on the entire pharma sector. What exactly is the view on individual names?
Well, I think they're following the momentum that we have seen in the market. So they've upgraded the target price across the board, and it's a sizable upgrade coming in for all of the counters that they have under coverage, the likes of Aurobindo, Cipla, Lupin, Ipca, Sun Pharma. So a lot of these names wherein they have upgraded the target prices quite materially. Now the thesis behind that is the fact that they expect that the US market is likely to perform better. A couple of reasons for that. First up, in terms of the small manufacturers, they are saying that the competition from them has actually reduced given the fact that interest rates have been on the higher end. A lot of these small generic competitors haven't been able to catch up to the kind of demand that we have seen in the US. So there's less competition. In fact, they are going ahead and saying that it's the first time in almost a decade that the competition has actually come down. As a result of that, the pricing power for the Indian makers actually improves. We have seen there has been consistent price erosion when it comes to the US market, but then now there are early signs emerging that the price erosion might be stabilizing. So that's the other factor that they're watching out for. Of course, in terms of the approval rate of the drugs as well as the approval rate of the facilities of the Indian manufacturers, that too has been on an uptrend, and that supports the argument as well. But Nikunj, do you think they are a little late in the game and the stocks have run up, or this is a more secular trend which is likely to continue at least for the next 6 to 12 months as well?
See, if I broadly divide the pharma space, you can broadly divide it into two. And this is just what I've learned over the years. There is chronic and there is acute. Chronic is essentially lifestyle diseases. So, for example, if you need a blood pressure medicine, if you need a diabetes medicine, that is something. I just love to talk about it. I just love to talk about it. I just love to talk about it.
Yeah.
So I'm just correlating that. In fact, the Macquarie reports talk about it. I'm not spoken to the analyst, but it's just a coincidence.
Go ahead.
Okay. No, so there is chronic and there is acute. Acute is infection. During COVID, acute companies which had an acute portfolio, acute drug portfolio did very well because it was a disease. Then you got lifestyle, which is chronic. Now, because of COVID, acute companies which had acute portfolio, they did rather well. Chronic took a back seat. Now chronic is making a comeback. Tension, stress, whatever you may want to call it, that is coming back. So companies which have a portfolio which is tilted towards acute, they are the ones who are making a comeback. They are the ones which are related to chronic, they are the ones who are making comeback. Which are the companies which are in that space? Well, there is Eris, there is Lupin, there is Cipla, there is Sun Pharma. So that, I think there is a change in terms of the portfolio positioning which will happen. B, we must also recognize that now the pricing power is also a function of availability and need. And in the US market right now, there is a shortage of drugs. US FDA has been very stringent in order to, they've been very stringent post the COVID lockdown started. So I think they're going to go easy on that. And then third, what Anisha mentioned, pricing power. The point here, Anisha, is that there was a time when everything in the pharma space went higher. But now I see a categorization. So I will not be surprised that US-facing pharma companies will do well. Within that, companies, like I said, which have exposure to chronic diseases or companies which have a chronic disease portfolio, I think they are likely to do better.
Okay, and we're seeing a bounce in some of the diagnostic names as well. No correlation though. But let's talk about one of the biggest drags yesterday, Anisha, Adani Ports. And CLSA has come out with quite the clarification saying that the disruption is going to be minimal, going by the region where all that is happening between Israel and Hamas.
Yeah, they're pointing out how there was a 5% slide for an asset which actually forms just 1.3% of their SOTP. So clearly the move that we saw yesterday was an exaggeration as far as CLSA is concerned, and they are saying that the war could actually be a good buying opportunity as far as these dips are concerned. Now, as I said, as per them, it forms only 1.3% of the SOTP, and even then, if you look at the payback period, in the worst case scenario as well, they're expecting a payback period of 6 years on this particular asset. So it's not far away from the best scenario, which was 4 years. Even if you look at the other internals as well, the traffic that this particular port, Haifa port, gets is largely imports, and it's sticky in nature because the imports are to the likes of coal as well as bulk materials, the demand of which is fairly inelastic. So that should also continue going forward as well. They have long duration concessions, so of course the near-term volatility is going to have perhaps an interim impact, but the long-term sustainability of the project is still quite intact. The location as well is something which is fairly different. Of course, the disruptions that we have seen in Israel are happening at the southern end. This particular asset is in the northern end. So that ways as well, there's a limited damage that we should expect for the infrastructure to see there. The stock is trading at 43% discount to the likes of Concor if you look at FY25 valuations as well. Of course, from the start of the year, we have seen kind of big cuts on this group as well. Do you think, Nikunj, this is something that will be taken as a buying opportunity by a lot of the investors as well, because Adani Ports stands out as one of those cash cows for the entire group, and now exaggerated knee-jerk reaction?
See, it's a very neat report which you've summarized that look for why did the stock fall yesterday? It's largely because of geopolitical tensions. What is the importance of that port in the balance sheet of Adani? I think it's less than 2%. Now for that, if the fall is 5%, of course it was exaggerated. B, I may also like to just, point out for our viewers here that the situation of the port is actually north, and the geopolitical issues or the the military attacks and the strikes which have happened, they are on the southern part of Israel. So I think there is no problem in terms of the terms of the port activity. Then you look at the long haul picture for Adani Ports. Great generator of cash, capacity built up, imports are going to increase. Coal imports, I mean, that's one of the mainstay. So when you see situations like this, when markets react and sometimes when they overreact for something which is not going to have a very meaningful impact in the medium to long term in terms of implications, earning implications, those are the time you want to buy some of these stocks. If there's volatility in the market, of course the stock would fall more. But for the fundamental thesis is the reason for the fall yesterday, purely in terms of numbers, I think would be called as a knee-jerk reaction.
In fact, staying on with that subject, Anisha, thanks for flagging off all those talks. The impact of Hamas and Israel war is temporary. That's the word also coming in from the SCI CMD BK Tyagi. Let's hear out an excerpt of a chat with him.
This is a momentary situation. Now all countries are very well matured and nobody can afford the war like war situation.
Concerns for shareholders of SCI has been the divestment process. How far has it come, and what kind of timelines are we expecting in terms of getting the bidders on board?
No shareholder should have any worry or any doubt or confusion. Government of India has decided this is going to happen for the good. And so shareholders, in fact, they will get much better value after disinvestment. But as I said, that this entire process is controlled by DIPAM, and DIPAM will be able to throw much better light. But this will happen for the good, that is for sure. Thank you.
But 2024 should be a good timeline to expect that?
Oh, yes, government, in fact, we must have read in the various newspaper also, they are targeting within this fiscal year.
Back with the market, right here on ET Now. Yesterday, we got pretty close to even breaching that 19,500 print, which we did, and then saw a recovery coming in from there. Twice, in fact, we did breach that mark. This morning, though, the global picture is a lot better. You have seen a massive recovery coming in for US equity markets. And the GIFT Nifty implied open indicates a solid start for us. The 19,600 is the print in the green that we're going to start off the day with. Let's welcome on board Sanjeev Bhasin then and find out what his market opinion is. Sanjeev, hi, good morning. And it seems like it's going to be a good morning. Seems like the market is going to put all that's happening with the geopolitical tensions behind us and see a recovery today.
Yeah. Good morning, Ayesha. So, yes, it seems to be a good morning. And like I said yesterday, the impact of that was really awesome, and very, very sad for the lives lost. But all happened over the weekend, and generally markets historically bottom out when bad news or the first guns are fired. I think this uncertainty over oil and may continue. But like I said, the US markets have started to discount bad news, which means that any good news could now be a trigger on the upside, which was evident in the stock performance yesterday by the US indices. Along with that, the flight to safety means gold and fixed income will see a lot of money come in. That's why yields fell over 14 basis points, one of the sharpest decline, and so did the dollar. So I think that India is in a very much sweet spot, and that we should be very, very well guarded against anything on oil, given that the reserves and everything else seems to be in order. So I think that given the demographic premium, the results ongoing, no reason why we shouldn't test 20,000 in the month of October. So very bullish, and use this fear in the next few days to create a portfolio, because generally this is the time when most fear makes you buy stocks which you always desired to.
So let's create that portfolio, Sanjeev, for our viewers. What are the top 3 stocks that you think would become attractive buys?
So first of all, Ayesha, Reliance has to fit the bill. I mean, the underperformance is down about 8% in the last 2 weeks. You are seeing that ADAI bought a 0.59% stake, which puts the valuation of Reliance Retail close to 9 lakh crore. And the total market cap at 15.5 lakh crore seems that oil to chemical business, Geo is getting discounted far too much. I can put my money on Reliance. I think if this market has to go back to 20,000, Reliance has to go to 2,600 and beyond. So I'm one heavyweight which I'm very bullish is Reliance. As a disclosure, we made some clients buy Reliance and Reliance Geo and HDFC Bank. The second stock which I like is AU Bank. AU Bank will come out with the strongest numbers we've seen, and I think that will be one of the leaders in the banking pack. The stock has done remarkably nothing over the last 2 weeks, and I think at 710 it gives you a very good risk opportunity of at least a 10% upside. Thirdly, I am very, very bullish on Tata Power. And I think that this correction closer to 248, 250 is an entry point, given that they are now arguably the largest EV charging stations and the type of, green power and the others on ultra mega projects. I think Tata Power seems to be in a very, very sweet spot. So these are three stocks, one large cap and two relatively mid cap stocks, which can outperform in the near to medium term.
It's quite interesting, that list coming in there. Tata Power, AU Small Finance and Reliance, which Sanjeev believes is a must-have in your portfolio. And you should be, treating the fear on the street as a buying opportunity for these names. So, Kunal, let's pick up on the charts of Reliance. Do you see current levels being a good entry point?
So, largely yes, Ayesha. I think current levels of 2,300 is a very good entry point for Reliance Industries. This makes the stock complete two important patterns on the technical front. One, of course, is the retracement towards its 200-day moving average. So I think the last 3 or 4 days, when the stock is just hovering around the 2,300 levels, it's also coinciding approximately with its 200-day moving average for Reliance Industries. On the other hand, 2300 on the historical front, I think 2300 and 2250 mark has been a historical support for Reliance Industries, specifically over the last 2.5 odd years, from specifically from the 2021 end correction which started off in the markets. So I think that was a point where Reliance Industries took a lot of support at those points. So that could now act as a strong support zone. So when you look at the charts, the risk reward to enter the stock at current levels could be very attractive. The second way to look out for in terms of Reliance Industries charts is on the hourly charts, or in the shortened time frame, where the stock is forming a consistent pattern of lower lows, but the RSIs are actually forming a pattern of higher lows. This, in classical terms, we call it as a bullish divergence. So even that should play positive for the stock price. So both in terms of the medium-term charts, the positioning of the stock at 2,300 levels is a very attractive risk reward to enter.
Okay, let's also talk about some of the other names which are in focus this morning. And, we were just flagging off that CLSA note coming in on Adani Ports. Sanjeev, do you think this fear on the street also could be a good entry point for the likes of Adani Ports, for instance? I think the stock fell a good 5% in trade yesterday. CLSA believes that, it's only a 2% drop in the overall SOTP of what Adani Ports, or rather what the Haifa port brings on the table for Adani Ports. And the region where the war is currently on, or the conflict is currently on, is far removed from Adani Ports operations.
Correct. And Ayesha, when they bought this stake over there, it was a very, very marginal intake. It only gave them entry into the Strait of Hormuz, which is most used by people over a period of time for the cargo of oil. Now, all that got impacted, and sentimentally, even a 2% exposure meant that the stock corrected 5%. I would definitely think all the Adani stocks are a buy. We are very bullish as a disclosure on Adani Port and Ambuja Cement. We think some of parts, all the Adani players are in monopolies, and they've raised enough capital now to shore up any problem going forward. Secondly, like you pointed out, generally these times are when most fear gets priced into the stocks, and even small exposures can highlight. From what I know, this is on the opposite side of where the real war is raging, and all people are discounting is that it could spread there. So there is always a little bit of uncertainty. But the management has morally guided that all their people and their workers are safe, and they are closely watching the situation. So I would definitely go with the CLSA note that this is a very good entry into Adani Ports.
Sanjeev, what's your thoughts when it comes to the entire pharma space? The latest note by Macquarie seems to be really advocating pharma stocks, the large cap names like Sun Pharma, Dr. Reddy's, etc. But given the kind of move that we've already seen, what's your outlook on pharma at the current juncture?
Yeah, so Avanne, pharma has been a darling of a sector in the last 2 months, and most people had written it off after COVID and the likes. But I think the results and the under ownership, particularly of stocks like Oro Pharma and Lupin, which are two which we have actually accumulated as a disclosure. We think that the large cap pharma are a very, very comforting sign, given that IT still has some of the headwinds, whereas pharma as a proxy to a weak rupee and a stronger dollar becomes a very good alibi. And thirdly, the business is doing extremely well. So Aurobindo, Lupin, and Sun Pharma on declines could be a very good basket. More than that, Avan, I would say that if you can't choose the stocks, better to do a sip in the likes of a SBI or a Nippon fund. They have very good pharma funds which have got a basket of stocks. So an ETF over there would be a very good idea if you want exposure into pharma.
Okay, fair enough. That's the view coming in as to how you should really be approaching the entire pharma space. What about the outlook on banks then, Sanjeev? Just, some of the large cap names that have already gone through their spate of underperformance, given what the growth prospects are lined up, what the expectation is from earnings, is it a good time to buy?
Well, the whole undoing of the index has been Reliance and HDFC Bank. And HDFC Bank, when they came out with a statement which was well known that they will take time for the synergies of the mortgage and the merger to play out. But, on one hand, their deposit and their franchise and their growth on the credit side is the best we've seen in many, many months. And if I go by that, then I think the underperformance may be coming to a stalemate. Secondly, Avan, if we want the index to go higher, HDFC Bank has to participate. It has been the sole concern of HDFC Bank's underperformance that the bank Nifty corrected all the way from 46.5 to below 44. I think that is overdone. And with this fall in yields and better credit, which we expect to expand faster than normal, I think HDFC Bank becomes a very good long-term and a slightly medium-term play. I don't rule out Bank Nifty going back to test 46,000 in this month itself. And there I would be very bullish on select banks like AU Bank, IDFC and RBL Bank, which are three banks where we are taking exposure and we think can outperform.
Patisab, how many stocks do you own? Because we've discussed 25 stocks already.
Nikunj, that's a broker in me. So if you are with IIFL Securities or you're following ET Swadesh, we'll give you a host of ideas or ET Now. And that's the beauty of the market. There are enough dishes on the, as Mr. Junjunwala said, there are enough dishes on the table. Choose what you want.
Well, choose what you want. Well, that's India for you. There's so many exciting things which are happening. And I just want to look at some of those AMS stocks. I was just thinking through it, yesterday. Keynes hit the market at 700 rupees. And today it is at 2600 rupees. Let's look at the YTD change in Keynes technology. And it is like a vertical tower. It is up 2.5x. And we're still left with 1 quarter. Rarely stocks go up by 2-3 times in a matter of just 8-9 months. Then you got Shirma SGX. Shirma SGX, a similar kind of a movement. I think it went public closer to 300. It actually came below the offer price. Diwali, I think it went public and it just came below the offer price. And after that, it's just been a straight line move again for Shirma SGX. So there are these new cohorts which in a sense are getting created. Anything which is coming up on your screen, Nuresh, which could be a mid-cap, yet a new breed stock?
So out of these names, actually, none of them come up. This comes into that sector which has become a story. And the story could take a big pause. We are quoting at 10-15x sales, and these are no more small companies. They're 10, 15, 20,000 crore market cap companies. So that would be an avoid. I would prefer something safe, which is propping up on charts, which is basically the whole ratings sector one by one. So we've seen Care Ratings break out and do well. That was a stock which was up yesterday 10% even when the markets were down. So that's a sector which is slow and steady and now suddenly taking prominence. We saw the highest volume in a 6-month period for Care. Then we are close to a new 52-week high, all-time high for CRISIL as well. So that stock looks very promising. That could be the next one which could break out going forward.
CRISIL, it's very interesting. We've actually not spoken about some of these, rating agencies. And the logic here, I think, is very simple. As India will grow, you will need more debt. So to raise debt, companies will have to get them rated. So whether it is CRISIL or whether it is, you got other more. CRISIL, I think, is a more prominent one in terms of in recall. But Care, I think, is the other one which is a rating agency. They are not very big in terms of size, but that's the other one which is the other one where you get a little bit optionality value. But since there is CRISIL and there is CARE and there is one more, it is just not coming on the back of my mind. There are 3-4 rating agencies in India.
Correct. And Nikunj, what people are missing is that it may be in early 24 that you get into the bond index, but the markets are looking very smart and they are pricing in some of the PSUs which have huge debt on sovereign basis. So REC, PFC, NTPC are three names which come to light, and they already have an extremely good sovereign rating. And as you've seen, those stocks have moved up very sharply because the yields on their returns will fall, and they will be the ones which will be first off the index. Secondly, like you rightly pointed out, now will be the opportunity for a lot of companies to get their debt re-rated, their balance sheets in order, and for that, what better than the rating agencies, which will actually have their back office full of work, given that almost 30 billion is being committed or talked about coming into the JP Morgan Global Bond Index. And I think this was much overdue, which also tells us, Nikunj, that we are in an era where those widows' income of high yields will be passed. You will have to deal with much lower yields going forward, and that makes equity or SIPs very, very attractive over the longer term as an asset class.
Reports are also indicating that cement companies could report pretty strong growth in Q2. Going by what we've already witnessed, are you being very selective and are you penciling in healthy growth for cement?
Yes, Avanne, cement will be a star sector, given that construction activity and capex are at the highest I have seen in many, many years. So, the likes of Ultratech, ACC, Ambuja, they will be riding their way to the, laughing their way to the bank, given that the margins and the volumes will be high. And I think price increases, if I'm correct, steel prices have gone up by 8% in the last week. I think cement prices are heading higher. And thirdly, just the sheer weight of market, share which these 3-4 companies have. That's ACC, Ambuja combined, which come in the Adani packet, Ultratech and Dalmia Cement, I think is almost 58% of the entire market share. So as a disclosure, Ultratech, ACC, Ambuja are all three under our portfolio coverage, and we think that they are headed higher. Ultratech being the market leader will definitely see more traction on the upside.
Another stock which has done exceptionally well for itself, I think, is TVS. Then there is Tube Investments. Then there is, talk about some of the South stocks, Kunal, we don't talk about some of these Southern franchises, Sundaram Finance, TVS, Tube Investments. I may be missing one or two names here, Rane Madras, EID Parry. Look at the gains they've given in the last 5 years.
Yeah, Nikunj, and I think, it's been a brilliant consistency. The consistency of these charts is the more important point over here, because rarely do we see that these stocks are amongst the top losers when the markets are going to a correction, but they are also not one of the best gainers in the market performances. What they do is more of a gradual performance on a day-to-day, on a week-to-week basis. So you may see these stocks rising up 10-15% in a matter of time. They don't. It doesn't happen flurry in terms of price action. I think that's the more stronger part. So when stocks scale up to new highs, we expect that the momentum should probably accelerate for many of these names. But the likes of TVS Motors, Tube Investments, Sundaram Finance, Chola, etc., these stocks have just gained consistency over the last so many months and over the last many years. And I think that's the bigger hallmark feature for these names.
Okay, fair enough. In the meantime, let's also get in a take as to some of the stocks that were abuzz in yesterday's trading day, despite the fact that the markets did come under pressure and the broader markets did see that spate of underperformance, declining about 1.7%. You did have some names that did manage to light up the screen. For instance, you had a Delta Corp, which gained about 2.8%, ITI, 11% on that counter, and even something like an Oil India. Naresh, I wonder what the charts indicate here.
So, say IT has already moved up quite a bit over the last 1.5 months, breaking out of 130, going up to almost 215 to 20 by yesterday. So the risk reward is not great. Now it's become a stock where there will be a lot of announcements going forward. So Oil India is the one which looks interesting on a longer term chart. I've covered it before also. The stock has hit a new 52-week high and an all-time high on a dividend adjusted basis. was struggling around the 295-300 mark and waiting to break out. Yesterday was the breakout point. And the interesting part is it saw one of the largest volume days in the last 6-8 months. So Oil India looks interesting. Any fade off today closer to 295-300 should be a buying opportunity.
All right, thanks so much then, Sanjeev, for taking time out and joining in. Good to get in all your stock recommendations right up on top of the show. Let's move right on then. And the life insurance industry's new business premium that has fallen for the first half of the year and for the month of September. What's the reason for that? That's largely due to the decline seen in LIC's growth, even as a lot of the private players are seeing a decent uptick. Let's get on board my colleague Harsh to give us more insight. Harsh?
Well, absolutely. Life insurance data trickling through. You're seeing with regard to the overall industry, you're seeing a degrowth when it comes to first half of FY24. There's been a degrowth in terms of new business premium of 13%. Also, for the month of September, new business premium has actually degrown 15%. Within the life insurance basket, let's start off with HDFC and Exide Life. Good set of numbers. HDFC Exide Life combined book has grown, new business premium has grown 15% in the first half of FY24 and 8% for the month of September. ICICI Pru Life, slightly more tepid numbers there, flattish new business premium growth, just about up 1% for first half, and actually September has seen a degrowth of around 2% or thereabouts. SBI Life has posted a very strong set. You are seeing new business premium up 24% for first half. September too has seen a 16% growth, so leading the way SBI Life. LIC has seen new business premium degrowth of around 25% in the first half and 27% for the month of September. Max Life too up a solid 26.5% in terms of new business premium in the first half of FY24, and September has seen a growth of a solid 24%. So Max Life leading the way, but you have the likes of an SBI Life as well as an HDFC Life performing quite well.
Thanks, Harsh, for that. Now, in case you've just tuned in, now here's the data for you, which is that crude has not seen any fall-off rally. There is no big spike in any of the risk indicators, whether it is gold or for that matter, even silver. Bitcoin is actually down, and volatility locally and globally has not, CBOE VIX and India VIX, which has not really gone through the roof. 11%, okay. CBOE VIX below 20, manageable. So first point, our viewers, please remember, this is not Ukraine and Russia. Ukraine and Russia was when two countries were fighting. This is a militia group and Israel. And this is something which will not have a very far-reaching impact. Economic impact is what I'm talking about. I'm not talking about geopolitical angles here. I'm talking about economic impact. Then that's the 10-year paper for you. 6th of October, 4.6. 10th of October, 4.8 has become 4.6. Dollar index, that's gold. No, that should be the dollar index, guys. Please take it out. Gold is not at 105. Brent is at 84.5, which became 88. So it has still not gone below 80. And that's gold for you. So Rahul Shah, from a market standpoint, what's happening in Israel, sad, unfortunate, tragic. But from a financial market standpoint, looks like it's time to move on.
So can you just repeat it? On a financial market support?
From a financial market standpoint, is it time to move on?
So hi, good morning. So I think we see a lot of concerns going on here and globally and all. So I think 2-3 things for India perspective. So I think way the markets are still trading at a reasonable valuations. Right, so obviously mid caps and large caps, if we compare that, so mid cap and small caps obviously are trading at a way behind in terms of premium valuation, that the valuations are rich, and large caps have underperformed. So I feel that overall market perspective, I think will not be anything great on a negative side, but I think this earnings season, what we get hold of it. So looks like that it should also be a good earnings season as well. So my sense is I think large cap stocks will outperform, mid caps and small caps might take a breather. But I think whenever we have seen the large caps performing, mid caps and small caps also rally. But I think way they have rallied, I feel it's time for a large cap. And usually in an election year, if we have seen that just before the elections, a 6 months period, the last 25-year data, if we remove this from 1999, what it suggests that I think markets have rallied 10 to 32%, 10 being the lowest, and in a couple of years, it has been also been 25 and 30%. So my sense is I think, and valuation-wise, markets are still reasonable. There's no euphoric conditions. So stable interest rates environment, inflation under control, and numbers have been quite good overall. So I think looks like that markets will continue to do well. It does not look like that. I think maybe that we might see some kind of a sell-off in immediate, maybe 4-5%, and then markets just stabilizing there and again building it back again. So my sense is that I think we should continue to hold on, or maybe this opportunity in sell-off, one should participate.
So how and where are you participating then, Rahul? If you could be a little bit more explicit by way of individual stocks, you're saying large caps. So which ones are looking appealing at the current juncture? Would it be banks? Would it be the likes of a Reliance Industries? What's the view?
So I think obviously the big outperformer, what we think and what we are overweight is on banking. So I think way the markets have been, the banking stocks have underperformed. So what we are looking at where there's a value plus growth in this entire banking as a sector. So I think obviously private and public sector banks, if we compare, public sector bank has done quite well in quarter on quarter, and they have outperformed it. And if you look at private sector banks have just stayed put or they have corrected in a quarter on quarter basis. So my sense is I think a mix of both. So maybe in a large cap play. So I think risk versus reward, HDFC Bank looks like a stable, maybe a quarter, maybe a dull quarter this quarter. But if you are a little bit longer horizon, I think HDFC Bank should outperform. So risk versus rewards, again, HDFC Bank will lead it. Then obviously the PSU pack as a basket. So we like large cap PSU banks like Canara Bank, like State Bank of India, Bank of Baroda. So these three are large players at that, and followed by I think as I started by value and growth. So I think we've added EU Bank also, and what we feel that EU Bank should do well. So maybe in last FY 19 to 23, the way that the growth perspective has been in small finance. So I think again the stocks have corrected, and I think reasonable valuation what we feel versus the growth which is going to get. So I think these are the areas where in a banks what we like.
I'm going to just change gears and talk about IT. And Nuresh, who would have thought 3 months ago that TCS will bounce right back up and will march to a fresh 52-week high?
Absolutely. So TCS has been a stock which has shown a lot of resilience over the last few months. And mind you, in the previous rally, it was a relative underperformer in that 2020 to 21 move. So in that sense, the stock has done well in this current rally. Out here, the base has been made very strong. We had multiple attempts around that 3,000, 3,200 mark. And now that base has shifted to 3,300 to 3,450 levels. So the view is going forward slowly and steadily, the stock remains a buy on dips and could be the first one in the two heavyweights like Infosys and TCS. The first one to actually go to a previous highs would be TCS. So expected to be a good defensive play on dips. Out here, any negative reaction on results or any opportunity which comes down, it would be a good buy on dips.
With us, lots more to chat about. Let's move right on and let's track all the smart portfolios as promised from ACE Investors. Today, we're picking out Mukul Agarwal, Dolly Khanna, Ajay Upadhyay's portfolios and finding out what are some of the changes that have been made. Sharad has compiled all this data and now joins us. Sharad?
Well, yes, in focus, we are having what the ACE investors have been buying and selling in the second quarter. And do remember now the September's shareholding pattern has actually come out, and it's been last 1 or 2 days when the entire updating of portfolio is happening. And at first, we are having Mukul Agarwal, Capsite Infra. Post the conversion in the preferential issue, now his stake has gone up to 8%. Earlier, it was almost 4% plus. Also, 2 new entries coming in. That means his stake had been below 1%, or there has been a new entry. And first time name coming in, Prakash Industries and Gensol Engineering with a stake of almost 1.4 to 1.6 4% respectively. Apart from this, also if you look at Dolly Khanna's new entries, we look at Prakash Industries. There's a new entry coming in with 1% stake, and also Prakash Pipes. That is where the stake has been hiked by roughly 40 basis points, coming in at 3.2%. And lastly, we have Ajay Upadhyay, where he has increased his stake in Precision Camshafts by almost 10 basis points to 2%. Now, this is a very developing story when it comes to the shareholding pattern changes, and we'll be getting you new updated numbers as well.
Very, very interesting in terms of where the HNI activity seems to be moving. I just want to bring this point out, and yesterday I saw data which is that the number of demat accounts which have opened are up 20% sequentially. We've got 13 crore demat accounts now. 13 crore demat account. Just think about it. The population of India, 140 crore, 13 crore demat account, which means technically 10% of Indians now have demat account. And demat account sometimes is owned by a family, which is that in one demat account, it actually could be the wealth of a family per se. So that I think is very, very important for us to remember, that the trend of SIP is important. But the way demat accounts are also opening, even if you assume that 25% is dominant, then also we're looking at a number of about 8 to 9 crore. So 8 to 9 crore active demat accounts in India. I mean, what a change it's been in the last couple of years. Financial market have really become the mainstream in terms of how the incremental demat accounts are now moving. So Rahul Shah, if somebody is opening a new demat account or has opened a new demat account and he wants to buy 3 shares for next 5 years, which are the 3 stocks you would advise for somebody who just opened a demat account? वो कहते हैं ना शगुन के 3 शेयर कौन से होने चाहिए?
So I think I've been very overweight on HDFC Bank as of now. So I think ek to pehla 100% HDFC Bank will be my largest bet on if somebody is looking for 5 years story. Second is Bharti Airtel. I think consistent compounder. I think where the stock has done and where the markets looks like. And thirdly, what I feel is from the pharma space, Sun Pharma. So these 3 stocks looks like in a large cap space for the next 5 years if somebody is looking at for building a portfolio. So I think these 3 stocks which I would recommend.
Okay, those are some integral must-haves in your portfolio in case you're wanting to build one or use this buying or rather use this decline in the market currently if it were to persist as some of the fresh additions in your portfolio. But Naresh, let's talk about HDFC Bank. The stark underperformance in the name, bearing heavily right now on the Nifty Bank's underperformance as well. Where do you see the stock move both in the near term as well as the medium haul?
So in the near term, the stock looks very, very sideways. Now, if you go back in time, the stock used to trade around this 1500 mark before the merger announcement got done. And in that period also 1400, 1450 was the low for almost 2021. We dipped lower in 2022. But post the merger also, we've seen multiple times 1700, 1750 has been a problem. 1500 is the pivot point. If it starts sustaining below 1500, then it gets into a deeper downturn wherein it could even go lower towards 1450. But now 1500 seems to be holding on. The last recovery was pretty strong. We saw a bit of a correction in the last 2 sessions, but 1500 is the pivot point. On the upside, 1600, 1630, which was the gap down we saw very recently. Till the time we don't cross that levels, the trend does not change. So this remains a problem zone for the index in terms of being a more than 12 to 14% weight. The stock remains sideways. And as of now, there are no indications of a turnaround or a further breakdown.
Okay, that's the take coming in on which way HDFC Bank's charts may be headed. Let's take stock of what are the stocks which are going to be in focus this morning. We've already flagged off Adani Ports and the CLSA note which has come in on Adani Ports, recommending the current decline, if at all it persists, as a buying opportunity and saying that yesterday's fall in the stock was quite over-exaggerated. There's Mazgaon Dock, which has got an LOI with a European client for a multi-purpose hybrid power vessel. So look out for what that stock does. IDFC First, they've sold their office at BKC to NSDL for 198 odd crore rupees. So that's going to be another stock which is going to be in focus. And then, of course, there's Concor as well, wherein the Q2 total volumes have seen an uptick of about 8%, or 7.5% actually to be precise. And the domestic volumes have risen about 26 odd percent, but this is much lower than what the market was penciling in perhaps. Maruti, they plan to end the contract manufacturing agreement with SMG. They've shared their capex plans as well, and that in addition to an announcement of a slew of discounts as well that they are going to be taking up at the ongoing festival season. Rahul, just wanted to get your sense in on how do you think the upcoming festive season is going to pan out for Motown and especially for passenger vehicles?
So I feel that obviously the passenger vehicles has been doing quite well, and if you look at Maruti's numbers or Tata Motors number, or in terms of maybe both of them, or maybe in commercial vehicles if you go Ashok Leyland. So I think the numbers have been pretty good, and looks like that in this festive season also should continue to grow. I think 2-3 factors for Maruti. I think if you look at the total sales in last 6 months or maybe a year, if you look at the composition of Maruti's sales is towards 50% of the sales comes from the SUV segment, or what we have been looking at it. So I think this is important from a lower end car segment sales or small cars, what we've been talking about a few years back in Maruti, and shift has been into the SUV segment. So I think this quarter also, and maybe this season also, should be good for Maruti. Easing of the chip supplies and inventory levels getting it lower. So I think all these factors will help Maruti as well. So I think Maruti remains a top bet in that entire sector, followed by what we feel is that I think commercial vehicle also should do well in a BFSI, in auto space. So I think the way the numbers have been, and we've seen the traction overall manufacturing activities coming back into the play. So I think most important, which is linked, is commercial vehicles. So I think in that space, Ashok Leyland remains the top pick. So I think Maruti in a passenger vehicle and commercial vehicle, what we like is Ashok Leyland.
Other one which is worth revisiting, Naresh, is Tech Mahindra. This has been one of those stocks where there is a lot of hope, there is a lot of hype that change of management will change the fortunes. The stock also has done reasonably well for itself in this year.
So Tech Mahindra relatively has seen more volatile moves in terms of the stock rallies up, corrects a lot more, does not, it basically takes one step up, one step back, and it's been a very slow rally in this move. But the last breakout for the stock was closer to this 1150 to 1180 mark. The stock has come closer to 1200 2 days back. So seems like this is an area where it should ideally bounce back from. And from the highs of 1800 back in 2020, and the correction is still pretty large. So it's not a stock which has recovered massively like the rest of the mid-cap names. So out here, a slow and steady recovery towards 1300, 1350. I would not expect it to break 1150, but the momentum is not great. But at these prices, this could be a good opportunity, but one will have to have patience.
If Nifty 80 points higher, the world is not a shaky place. I'm purely talking about the financial markets here. Our heart goes out to what's happened in Israel. But in terms of the financial market impact, whether it's US market, now US market is the most sensitive market because of the existing relationship with Israel. I mean, Israel is US ally. The dependence and the interdependence on each other is very strong, whether in terms of technology, whether in terms of defense, whether in terms of collaboration. So just imagine the handover from US markets last night. Look at the US, look at Dow, look at S&P. It's like they've just moved on. US bond yields from 4.8, they've come down to 4.6. So frankly, from a US market standpoint, from a global market standpoint, why are we still Nifty? I show US markets. The US market has shrugged it off. That I think is very, very crucial. That's volatility index for you, Bitcoin, gold, volatility index. Let's look at CBOE VIX also. That also will tell you that how things are moving up in terms of the stack. And there is more green than red. There is little volatility and there is no reason for financial markets to panic. So Kunal, yesterday we were thinking, I think Sona lene ka samay aa gaya. Right? It appeared like that. But there is no real follow back rally in gold.
Yeah, if the markets can survive Russia and Ukraine and still make a new high, I think this could be digested maybe in a couple of days.
And the other one, Kunal, is that crude has not seen any follow-up rally. It is below 90.
So, and that's the classical point. So from 97, I think 97, 98 was the high for crude. We fell to almost sub 85 levels. Yesterday, we jumped up to, I think, 86.8 or 87 plus for Brent crude. So, after a $13, $14 drop, if you see crude rising up by just about few dollars, a couple of dollars, we still believe that, it's nowhere close to a scare or a fear kind of a scenario for the indices or for this asset class. And as it is, I think when we've seen such a sharp sell-off in terms of crude oil, we'll probably expect more downward trend or downward push for these asset classes. So there could be intermittent bounce into this asset class like what we saw yesterday, but then eventually these asset classes, they tend to get into a corrective phase. So I would actually expect crude to maybe slowly and gradually come back towards that 80 short mark. So would not be too much optimistic on the near-term prospects of this asset class.
Okay, that's the take coming in on the impact of the Israel-Hamas conflict. But in the meantime, let's also get a sense of what's going to happen with the mid and the small caps. And Naresh, what are your mid-cap picks?
So would be playing a little more defensive here. A buy on Indigo. The stock has corrected back to 2450, 2470 levels. Give a breakout about 2420. A reversal looks like a good entry point here. The trend is positive. The reversal is done. So next move could be towards 2600 plus the stop loss at 2400.
Kunal, what about your mid-cap strategies?
I'll go with the buy on VIP Industries. That stock is bouncing back from its 50-day moving average, completing or just about to complete a bullish flag pattern. So the risk reward is attractive to enter at current levels. Targets of 700, stop loss 660.
Okay, let's get a move on then and take you through some of the other top headlines that we're tracking outside of the world of business. And 4 days on, over 1,500 people have been killed in the ongoing Israel-Palestine war. The Prime Minister of Israel has warned Hamas to use enormous force as the terrorist organization threatens to kill hostages. Israel also has ordered a complete siege in Gaza. Hamas officials have said that they are open to discussions over a truce with Israel. Meantime, a slew of job cuts have been witnessed in the auto space after companies like Stellantis, General Motors have announced job cuts. Meanwhile, Ford has already slashed 70 workers, bringing the total to about 1865 since the strike has begun. A total of 640 workers at Stellantis have been laid off. And staying with the auto space, the shares of Tesla have fallen after the company's EV sales in China have declined nearly 11% for the month of September. The sales for the Model 3 and the Model Y vehicles, which are made in China, have been down about 12% from August to September. Do remember that this dip in sales follows the news of the Q3 deliveries as well that have slipped sequentially.
And renowned economist Claudia Goldin has clinched the 2023 Nobel Prize in Economic Sciences. Professor Goldin, hailing from Harvard University, is honored for her groundbreaking work unraveling the intricacies of women's labor market outcomes throughout history. And talking about the Indian mainland, one army soldier was killed after a contingent comprising approximately 40 personnel was caught in an avalanche on Mount Kun in Ladakh. The body of the deceased soldier has been recovered while search operations are on for 3 more soldiers who are currently trapped underneath the snow. The army personnel were involved in routine training activities. And now for some good news for cricket fans. After 128 years, the cricket is set to be included in 2028 LA Olympics. In fact, the organizing committee in its proposal to the IOC has recommended cricket in its T20 version as well as 4 other sports for the 2028 games.